Hello and welcome everyone to today's webinar on utilizing Excel for financial analysis and modeling. This webinar is going to be divided into three different sections. The first and the foremost is going to be talking about financial modeling in Microsoft Excel. That is going to be a brief discussion about the head points in which why financial modeling is very useful in Microsoft Excel. After that, you and I will be creating three financial statements in a financial model. We're going to start with the structure of the income statement, balance sheet, and the cash flow statement. And at the end of the webinar, we are going to look at different outputs: equity research model, project finance model, and a compact DCF model that will help us understand the ease of customization that is available in Excel. So let's begin. With the very first point, usability. You might know that from a very early age you are familiar with Microsoft Excel. Today, in a population of 7 billion, more than 1 billion users of Microsoft Office are using MS Excel. So not just with a very large base, the usability and the functionality is also something that you're very familiar with in Microsoft Excel. Moving on to the second reason why financial modeling is always advisable in Excel, it's because it is economical. Once you have acquired the MS Office suite, you don't have to pay any other charges. You can create as many rows, as many columns, as many financial models, as many templates. There will be no additional cost. However, if you were to take an application or any other third-party service for financial modeling, depending on their plan, either by charging for each template that you do or for every month or every year, you are going to incur an additional expense. So that in that area as well, Microsoft Excel is the preferred choice. And finally, the third important point why you should choose financial modeling in Excel is the ease of creation. If I were to ask you that these are 5 years, year 1, year 2, year 3, year 4, and year 5, and I said, now I want to increase one more year, you have to add one more column. That's all that you have to do, or simply add one more year, year 6. Because you know the operations in this case. For a different platform, you will once again have to be familiar. For a different platform, you will have to be familiar with how the operations in that software are. If you want to achieve a particular objective, you will have to do it as per the understanding and the methodology of that particular software. In MS Office, it is just like working with Excel. So that really saves a lot of time and also makes it convenient for you to achieve your objective. Now let's begin with creating three financial statements in a financial model. For this, I hope your MS Excel is ready on the screen. So you and I will be creating three financial statements, and what I would also request you is to listen intently as I will tell you the directions and the cell, and you and I will create them together from scratch. This is what it will look like: your balance sheet, your income statement, and your cash flow statement. This file will be given to you at the end of the webinar. But right now it is important for us to understand that there are three steps in financial modeling. The first one is populating historical data. The next step is forecasting financial performance. And the final step is valuing that particular project or company. So the first and the most important step is populating the historical data, where you need to understand the financial numbers. You need to understand the three financial statements. So let's begin. I would request you to open a new sheet, and in cell B2, type in case 1. Let's assume you want to start your own business of printing t-shirts. So with your own money of $5,000, you went ahead and purchased a printing machine. Let's start with the first financial statement, a balance sheet. So in cell B3, I'm going to write balance sheet. Then I'll press enter. The balance sheet, as we know, has two sides. First, we have the liability sides, and then on the other side we have the assets. Since we decided that we are going to start our business of a printing machine, we are going to use our own money. So our own money is equity. Let's type in equity. Let me zoom in so this will be more convenient. An equity that I bring into this business of $5,000. What do you do with that $5,000? You buy a printing machine, which is going to be called your fixed asset. There we go. Fixed asset worth 4,000. Now in cell C10, I want you to use the sum formula by simply pressing Alt equal to. Press Ctrl Enter, and on the left side type in total. Press Ctrl B to bold, and then simply add a border. The shortcut that I used is Alt H, B and P. Now since that is done, copy these two cells on the asset side as well. Now that we have the total, in cell B11 type equal to. You just have to need, it's just supposed to write the word check, and in C11 you type in equal to, C10 equal to E10. Now this clearly states that our balance sheet is not tallying because we have equity, that's our own money, worth 5,000. With that we bought an asset worth 4,000. So where is the remaining 1,000? That's in cash. So type in cash and then type in 1,000. The moment you press enter, your balance sheet will tally. Now that is the status of the balance sheet at the beginning of the year. So let's complete the basic formattings where I want you to just press Ctrl B and U for the balance sheet. And then I want you to simply underline from B4 to E4. After that, you can select these two cells and press Alt HM and then enter, and do the same for assets as well. Now that our assets and liability side is complete, let's turn our attention to creating an income statement. Copy the balance sheet on B3 and paste it in G3, and then type in income statement. This was simply to save the time of formatting again. I would also like to squeeze in the columns for better visibility. What I will do is press Alt OCW and then press 2. So they are adjacent to each other, closer to each other comparatively. Now what does your income statement have? It has your revenue and your expenses. So let's begin with the first line item. With the printing machine that you purchased, you were able to print a lot of t-shirts for the entire year. By the end of the year, your revenue in cell G4 was 3,000. Now, to generate these revenues, you also had to incur costs. Costs indirectly related to this revenue would be the ink or the other raw materials for your printing machine. So your cost of sales in cell G5 is 1,500. Now the moment you subtract the cost of sales from your revenue, the first line item that you receive is the gross profit, also known as the gross profit. You can simply do a sum formula and you will have the gross profit in front of you. Now, after gross profit, you move on to other line items which are related to your expenses but not directly related to any revenue. These are known as operating expenses or OPEX. Operating expenses consist of selling, general, administration, and in some cases even depreciation. For our case, our OPEX is minus 800. Alt OCA is the shortcut to very easily expand the view if the content is not fitting in. So as I was saying, your operating expenses, which is not directly related to sales, was 800. And just to add more clarity, because we are going to take more than one case, let's make it equal to minus 600 referring to as your, and minus 200 depreciation. We are going to do the formatting once again. Now, Rishabh, I'll get back to you as for the formatting. Now let's continue with the flow of our income statement. Since we have determined that our operating expenses are selling general, so what is your SG&A? You can have examples of rent, you can have examples of utility, you can also have examples of depreciation. And the moment you subtract these expenses from your gross profit, you arrive at EBIT, earnings before interest and tax, aka operating profit. Operating profit is one of the finest measures of the efficiency of the business, because the income and the expense is relevant to the nature of the business and you have not taken into consideration any corollary line items. So your operating profit is once again the difference of your gross profit and your operating expenses. So we have arrived at an operating profit of 700. Now after that, since we have no non-operating income and expenses, and we definitely do not have interest expense because our funding was purely by equity, we can straight away pay for tax. So in cell G9, please type in tax. And let's assume a tax rate of 20%. In cell H9, press equal to, link the previous cell of H8 into minus 0.2 and then press enter. After you have subtracted all the relevant expenses starting from your cost of sales to your operating expenses all the way down to your tax, the amount that you're left with is your bottom line, aka net profit. So that is the completion of our income statement where we arrive at the net profit. Now once again, you can select the formatting above, click on Format Painter and then select the net profit selection. Press Alt-HB-O on your keyboard once again to have the bottom border as well. We started with the balance sheet at the beginning of the year. We have constructed the income statement for during the year, and now let's move on to the cash flow statement. Once again, you can squeeze in this row of column A. You can squeeze in the column I by using Alt-OCW, and the format that we have maintained is 2. Let's begin with the cash flow statement. The cash flow statement, as we know, is because the income statement and the balance sheet follows the rule of accrual accounting, not the movement of cash. So it is important to have the cash flow statement to understand the inflows and outflows during the year. So once again, let's type in the title in cell J3, cash flow statement. And let's begin with the construction. A cash flow statement in the conclusion is simply going to be your opening cash balance, changes during the year, and closing cash balance. So let's start with the closing cash balance. It is nothing but the opening cash balance plus the changes during the year. Now what's left out is to determine what were the changes during the year. The changes can be divided into 3 broad categories. The first one is cash flow from operational activities. Then you have cash flow from investment activities, and finally you've got the cash flow from financing activities. So whatever cash movement that happens during the year falls within these 3 different heads. There will not be a 4th head. So let's begin with understanding what were the inflows and outflows during the year. At the very beginning, we will write the net profit, because we have assumed that all of these cash inflows and outflows were in cash. So our net profit in cell K4 can straightaway be linked. How do you link? You just press equal to and you click on H10. Your net profit has been linked. And in cell K7, I would request you to press Alt equal to take the sum. So our cash flow from operations, our first category, is 560. Now let's move on to cash flow from investment activities. For investment activities, fixed asset is where your money went, and remember, it was not an inflow, it was an outflow, equal to minus 4,000 because you purchased your machine. So your sum is going to be only one item here as well, and you can simply select and click on Format Painter and then paste it here to save the time for formatting. And finally, you can shift the selection down, and what we are left with is the third category of cash flow from financing activities. Click on cell J12 and write in equity, or you can write in proceeds to indicate an inflow from equity. So your proceeds from equity was the money that you brought into this business. Once again, this is going to be the sum, and your formula is ready. Now that we have calculated the three different baskets of operational activities, investment activities, and financing activities, let's sum them all together in cell K15. I want you to go to cell K15, type in equal to. First, click on K7 plus, then click on K10, and finally plus again and click on K13. So our balance during the year is 1560. Did we have any opening cash balance? No, we did not. This is the first year. Now that our cash flow statement is complete, we need to revisit our balance sheet because the balance sheet was created at the beginning of the year. The two adjustments that we will make in order to make this complete first come to the cash figure. At the end of the year, as per our cash flow statement, our cash balance is 1560. Now you can press Ctrl Shift 7 and that will format by adding borders across that selection. So once again, click on cell E6 and type in equal to and link the cell of K16. The moment you do that, you're going to be greeted with the error sign of false because your balance sheet is not tallying. Why is it not tallying? Your cash balance was 1000. You made a net profit of 560, so your cash balance went to 1560. But with this net profit, you did not pay out any dividend. It is still in the business. So it needs to be represented on the balance sheet under the liabilities section, below equity, under the head of retained earnings. You can press Ctrl Enter to stay on that cell and Alt OCA to get the expansion. And now the first case is complete, where our balance sheet, you still have to link it, so you can press equal to in cell C6 and then quickly click on H10. There we go. Now that we have received the true sign, we are good to go. So revising what we did today, we prepared the balance sheet, income statement, and cash flow statement. Now what I would request you to do is click on row 2. Remember that you're not supposed to click on a cell, you're supposed to click on the number, and the indication is that the cell, the cursor, will transform into a row. Hold your selection and select it all the way down till row 17. Now that this is done, press Ctrl C, come all the way down, click on row 20 and press Ctrl V. This is going to be our second case, where we will further analyze and understand what we are doing in the financial statement analysis. And the topic for case 2 is going to be depreciation. Now, since we had discussed at the very beginning that our operating expenses has 600 as SG&A and the remaining 200 as depreciation. But depreciation, as we all know, is nothing but an accounting treatment. There is no cash outflow. So we need to reflect that accurately in the cash flow statement. Below net profit, you type in depreciation by that figure of 200, because you have not paid out 200. It is still there in the business with you. So the right and accurate representation is going to be like this. The moment you press enter, you realize on your balance sheet that the check has once again turned to false. Now, why is that happening? Because you are suggesting that the asset that you purchased for 4,000 at the beginning of the year has depreciated, but you're not reflecting the change. How do you do that? Press F2. At the beginning, type equal to, and at the end, simply subtract the annual depreciation. So what you will arrive is the net fixed asset value, and your balance sheet tallies. Now that was the completion for the case 2 of depreciation. Now let's move on to the third and final case of working capital line items. So once again, what I would request you is, and then scroll all the way down to row 34. Press Ctrl C. In row 40, press Ctrl V. And our case 3 is going to be about accounts receivables and accounts payables. Come to the income statement and remember that our assumption was of cash movement. That was our default assumption. We assumed that all of these transactions were actually received and paid out. There was no credit transaction. But it so happened that in the last week of the year, you had a friend who came in and he said he wanted to purchase a printing t-shirt for the 31st December celebration. But he did not have the money then. He said once the salary comes in the next month of January, he will pay you. So you, being a good friend, you gave him the t-shirt without taking money at that moment. So that particular transaction is going to be qualified as a credit sale. Now we will not reduce the revenue line item on the income statement, but what we will do is go to the cash flow statement and make this correction. We will inform the cash flow statement that out of the 3,000 of revenue that you generated, accounts receivable for your friend was 200. So you did not receive 3,000 and revenues received 2,800. So this profit has to go down by that figure, minus 200. But the moment this is done, you will notice that your balance sheet is not tallying. The reason is because, as you remember, that the important principles of financial statement is double entry accounting system. So the second entry that needs to be on the balance sheet is accounts, or we'll simply write receivables. $200. There we go. Now let's take the opposite case on the payable side, where we will simply add another line item by making room for more and including it in our sum calculation. Just like your revenue, your operating expenses as well, there was a line item of 300 where you had not actually paid out cash. You promised to pay it in the next year, but not in this financial cycle. So we need to reflect that as well. That even though you are suggesting you paid out 600, remember 200 was depreciation. $300 was payable, so this money is still with you. So your cash has to be up. But remember, your cash balance has gone up, but this is not a profit. This is an expense that you have kept with yourself in order to pay at a future date. So it needs to be reflected on your liability side under the head of payables by that figure of 300. Now, as you can see how important it is that the very first step of financial modeling is to be thorough with financial statement analysis and the understanding of the flow of numbers and also what the numbers represent is absolutely pivotal. Now that we have looked onto these 3 examples, I would request you to practice them even after the video is ended and start from scratch. Only then you'll be able to thoroughly understand the different structures. Now that we have looked at the 3 financial statements, let's look at the cases of ease of customization in Excel. So let's take it on case by case. As I had told you, that the financial modeling is done at a very diverse level. It is done in financial firms, non-financial firms, and even consultants do it on an hourly basis. So naturally, with such a diverse scope, the project objective will also be very diverse. If you are working for an equity research model, you would like to create a financial model for 3 to 5 years and you would like to adjust each and every line item. For project finance, the time frame is really long. It goes up to 10 to 20 years or maybe even more. And in that case, you don't tweak each and every line item like you did research. You simply add the assumptions at the very beginning. Or in third case, how about a compact DCF model? Your boss does not want to look at the different sheets. He does not want to look at multiple sheets. He just wants one sheet in order to make his investment decision. So let's understand by looking at each one of them. We're going to start with project finance. And as you can see, that this is the assumptions sheet. The assumptions sheet is where all the key numbers or the starting point are stated. You have your revenue assumptions, you have got your capex assumptions, the project duration, your capital structure, operating expenses, etc. These are the initial year assumptions. So the schedules are then constructed starting for the next 30 years. And then we can continue all the way down understanding the different structures. Moving on to the financials and finally to the NPV and IRR. Now, what if the case was different and you were looking at an equity financial model where the forecast horizon was just 5 years and you would also be required to tweak each and every line item. So the structure here would differ significantly, and as you can see the indication by those blue drivers, it can be done for each and every line item. And finally, when your boss says that I'm not looking for a structure of multiple sheets, I just want to work with one sheet where I can look at the output straight away. So there you have a different structure of a compact DCF model where you've got the charts in the first section from row 1 to row 16. You've got the calculations for FCFF, WACC, cost of equity, cost of debt, and a sensitivity analysis table. And finally, you've got your assumptions. So if he feels that these assumptions are slightly too modest and he wants to be more aggressive, he can do that very easily. The revenue growth currently is 2% for every year. He can change it to 5 and he can see that the potential of the stock has gone in from 14% to 32%. Likewise, he can make so many corrections as per his understanding and as per his knowledge of that particular company and project. So that's once again giving you another idea that it is very important to have a very diverse understanding. But first you need to get your basics right. If your confidence of creating a financial model from scratch is very good, is very high, then you'll be able to take care of all these diverse needs. And that is very important in financial modeling because the need differs, the requirement differs. You need to execute the requirement as per your fluency in financial modeling. And with that, we complete our session for today. The practice file is going to be attached to you, the link. You can practice the income statements and become more and more fluent in financial modeling by strengthening the area of financial statement analysis. Thank you very much for your time and wish you all the very best. Goodbye.